Hi guys, welcome back to my channel. Today I'm looking into the latest inflation numbers in the United States that just came out yesterday. Don't worry if you are not an economics expert because I'm going to simply break it down. So let's get started. So according to the BLS report, consumer prices went up by 3.2% past year until July. But wait, because there's more to the story. That's actually good news for the economy. The headline rate might seem a bit high, but when we look closer, we find some encouraging stuff for the Federal Reserve's fight against rising prices. And here's the scoop. This latest inflation shows that the price hikes are starting to slow down. So this is something the Fed has been working for more than over a year now to make sure the economy stays balanced and the prices don't go through the roof. When we look at inflation, we are essentially looking at the CPI or the Consumer Price Index, which is like the big measure of how much things cost in general. It went up by 3.2% from last year, July. Yeah, that's the first time it's been up over a year following a 3% increase in June. But let's not get caught up in the numbers. Last year, around June, prices shot up really fast and they kind of slowed down a bit in the next month. So yeah, when we compare this year's numbers to last year's, it seems like June had smaller price hikes and July had slightly bigger ones. But now economists are really watching a special number that is called core inflation. This fancy term basically means that you're looking at price rises without the crazy changes in fuel and food prices. And guess what? Over the past year, those prices went up by 4.7%. This is a bit lower than the 4.8% increase in June. And if we talk about just 1 month, core inflation only went up by 0.2%, which actually is pretty low. So what's the big takeaway from all of this data? Well, it looks like inflation fever is starting to cool down, and that's not just all. The details for July are giving us some positive vibes about what's to come. So rent prices are becoming more stable, which means they're not going up crazy fast anymore. And this trend is expected to stick around for the next few months. And it's a good thing because it helps to keep overall inflation in check. Because the way BLS calculates the data, housing accounts for nearly 1/3 of their inflation calculation. So to sum it up all, inflation is slowing down and the numbers from July give us some hope for the future. If you have been following the news, we know that the federal funds rate has been sitting around 5.25% as of now, and they have been raising the rate since last June to control inflation. And the Fed has to do it slowly because it's like if you are trying to cool down a hot pan, you don't want it to go from super hot to super cold too quickly. It's all about finding that balance. Whether the Fed is going to increase the rate further, we will have to see until their next month's meeting. So keep an eye for more updates, and remember, on my channel, I try to make even the trickiest stuff sound easy. If you found this video helpful, don't forget to give it a thumbs up and subscribe for more such information. And I hope you enjoyed today's video. And if you want to find out what causes inflation, you can check out this video here. Take care, and I'll see you soon in my next one. Bye.